Let's say you want to buy a luxury car that costs $50,000. If you are a responsible, hardworking member of the middle class, you know exactly what to do. You work overtime, you budget strictly, and you quietly stack your cash. After 2 years of discipline, you proudly walk into the dealership and hand over a $50,000 check. No debt, no car payments, you own it free and clear. You feel incredibly smart, you feel financially responsible, but I am going to tell you a harsh mathematical truth. You just committed financial sabotage. My name is Max, and today we are going to talk about the absolute biggest difference between how the middle class and the ultra-wealthy make large purchases. Society has trained you to believe that paying cash for an expensive luxury is the ultimate flex. But the wealthy look at that $50,000 check completely differently. They don't see a car. They see 50,000 tiny financial soldiers that could have been deployed to capture more territory, but were instead sent to die in a depreciating hunk of metal. The middle class saves up to buy things. The wealthy save up to buy machines, and then they let the machine buy the things. If you have ever wondered how a millionaire can buy a yacht, a vacation home, and a sports car without watching their net worth shrink, you are about to find out. Today, we are breaking down the exact loopholes and strategies the wealthy use to buy everything while practically paying for nothing. Let's get into it. Let's move to the first strategy, the golden goose rule. Financial nerds like to call this an asset swap, but I prefer talking about geese. When you take $50,000 of your hard-earned savings and buy a luxury car in cash, you are taking your golden goose, chopping off its head, and serving it for dinner. Sure, it tastes absolutely amazing for one night, but tomorrow morning, you have nothing left. You have to start completely over. The wealthy never kill the goose. They only eat the eggs. Instead of walking into the car dealership with a $50,000 check, a wealthy person takes that exact same $50,000 and buys a cash-producing asset. This could be a portfolio of high-yield dividend stocks, an index fund, or a piece of a real estate syndicate. Let's say that asset conservatively generates $500 a month in passive cash flow. What do they do next? They walk into the dealership, finance the car, and set up an auto pay. Every single month, the asset produces $500, and that $500 goes directly to the car payment. The wealthy person does not lift a finger. Now, let's look at the brutal math 5 years later.
If you bought the car in cash, 5 years later you have a used car worth maybe $20,000. You lost $30,000 of your wealth permanently. But if you use the golden goose rule, 5 years later, the loan is completely paid off. You still get to keep the used car, but here is the magic trick. You also still own your original $50,000 asset. In fact, if that asset appreciated in value while it was busy paying for your car, your $50,000 goose might now be worth $70,000. The middle class pays for luxuries by sacrificing their principal. The wealthy pay for luxuries using the byproduct of their principal. They convert assets into more assets, while you are converting labor into trash. Let's move to the second strategy, the buy, borrow, die cheat code. This is the exact strategy billionaires use to fund their outrageous lifestyles, and it exposes the biggest flaw in the tax system. When you see a billionaire buy a $100 million super yacht, what do you think happens? Do you think they log into their Vanguard account and hit sell on $100 million worth of their company stock? Absolutely not! If they sell that stock, they trigger a massive capital gains tax event. Depending on where they live, they might have to sell $130 million worth of stock just to pay the government and walk away with the $100 million they actually need. Plus, once that stock is sold, it stops compounding forever. Selling assets is a loser's game. So what do they do instead? They use a cheat code. They pick up the phone, call a major bank, and pledge their stock portfolio as collateral. Because they are putting up highly liquid assets, the bank gladly hands them a $100 million line of credit at a ridiculously low interest rate, let's say 3%. Here is why this is a financial superpower. Loan proceeds are not income. You do not pay a single penny of income tax on borrowed money. It is 100% tax-free cash. Now, look at the math. They are paying the bank 3% interest on the loan, but their stock portfolio is still sitting intact in the market, growing at an average of 8 or 10% a year. The asset is literally growing faster than the cost of the debt. The spread between the growth and the interest actually pays for the yacht. The middle class treats debt like a prison because they use it to buy things that go down in value. The wealthy treat debt like a tax-free magic wand. They buy assets, they borrow against those assets to fund their lifestyle, and they pass the assets down when they die to wipe out the tax bill. Buy, borrow, die. Let's move to the third strategy, the pre-tax matrix. This exposes the most brutal, legally sanctioned inequality in the entire financial system. It is the difference between buying things as a person and buying things as a business.
Let's go back to our $50,000 car example. If you are a regular salaried employee, how much money do you actually have to earn to buy a $50,000 car in cash? The answer is not $50,000. Depending on your tax bracket, you probably have to earn around $75,000. You earn the $75,000, the government immediately swoops in and takes their $25,000 cut right out of your paycheck before you even see it. Then you take the remaining $50,000 and buy the car. You are buying your lifestyle with after-tax dollars. These are the smallest, weakest, most heavily taxed dollars in existence. Now, let's look at the wealthy. The wealthy rarely own things in their own names. They control things through LLCs and corporate entities. When a business owner wants that exact same $50,000 vehicle, they don't buy it as a person. They buy it through their business. The business earns $50,000 in revenue and then immediately uses that money to buy the vehicle, classifying it as a legitimate business expense. They buy the car before the government touches a single penny. They are using pre-tax dollars. To buy the exact same vehicle, the employee had to generate $75,000 of value, while the business owner only had to generate $50,000. That is a massive $25,000 discount legally mandated by the tax code. This doesn't just apply to cars. It applies to laptops, cell phones, internet bills, travel, and meals. The middle class pays retail price plus income tax. The wealthy use corporate structures as invisible shields to write off their lifestyles and buy things at a massive pre-tax discount. Let's move to the fourth strategy, the infinite return loop. This is how the wealthy literally clone their assets without ever saving another dime from their day job. The traditional middle-class dream is to buy a house, work a job for 30 years to pay off the mortgage, and eventually throw a party because you own your home outright. You are taught that a paid-off house is the ultimate financial goal. But to a wealthy investor, a paid-off house is a financial tragedy. It is what we call dead equity. If you have a $500,000 paid-off house, you have $500,000 trapped inside drywall and bricks. It is earning 0% interest and doing absolutely nothing to generate new wealth for you. The wealthy play a completely different game. They use a mechanism called a cash-out refinance to unlock that dead equity and achieve mathematically infinite returns.
Here is how the loop works. Imagine a wealthy investor buys a rental property for $300,000. Over a few years, the tenants pay down the mortgage and the real estate market goes up. The property is now worth $500,000. The middle-class person would leave it alone. The wealthy person goes to the bank and says, I want to refinance this property and pull out my $200,000 in equity as cash. Because of strategy number 2, we already know that loans are tax-free. The bank hands them a check for $200,000 and they pay absolutely zero income tax on it. But here is the ultimate punchline. They still own the property. The property is still going up in value. The tenant is still paying the monthly mortgage for them. And what do they do with that $200,000 of tax-free cash? They use it as a down payment to buy 2 more properties. They just turned one asset into 3. They extracted all of their original capital, which means their rate of return on that first property is now mathematically infinite. They are playing entirely with the bank's money. The tenants are paying the debt, and they just multiplied their wealth without ever touching their personal savings account. Let's bring it all together. The financial system is absolutely rigged, but it is rigged in plain sight. It naturally and mathematically favors the people who own assets, and it ruthlessly punishes the people who don't. The middle class is trapped because they play the consumption game. They trade the most valuable thing they have, their time, their life energy, their blood, to earn cash. And then they immediately trade that cash for depreciating plastic, metal, and temporary comfort. They are stuck on a treadmill, running as fast as they can just to stand completely still. The ultra-wealthy refuse to trade their blood for plastic. They use their capital to buy machines. They build an army of assets. They let those assets generate cash, they let inflation pay down their debt, and they let the tax code subsidize their lifestyle. So the next time you are tempted to drain your savings account to buy a luxury you think you deserve, I want you to stop and ask yourself one brutal question. Are you buying a machine, or are you just buying a toy? Is this dollar going to go to work for you, or is it going to go to work for a bank? Stop saving up to buy things. Start saving up to buy a golden goose, and let the goose buy the things. If this video changed the way you look at money and wealth, hit that subscribe button so we can keep exposing the financial matrix. Drop a comment below and tell me, what is the first asset you are going to buy before you upgrade your lifestyle? I read every single one. I'm Max, and I'll see you in the next one.